We continue our markets coverage right here on the close. Bloomberg Television counting you down to those bells. We just got about 50 minutes or so to go before we get to them. Let's get some insights out of our next guest. Eva Ados joining us right now, the COO and Chief Investment Officer over at ERShares. And Eva, let's start off here with earnings season, because a lot of us are kind of looking to tonight and really over the next couple of days where we're really going to start to get those big cap tech names in the index finally reporting, finally showing the revenue growth, showing the profitability, and more importantly, showing whether investors are comfortable with the valuations that some of these stocks sit right now. In aggregate, what do you really want to hear out of some of these companies over the next few days and weeks?
Well, we are cautiously optimistic, and I think many companies, especially in tech and healthcare, have been proactive. They have been cutting down their SG&A costs in order to face inflationary pressures. But what's most important to us is the macroeconomic events, because up until now, up until yesterday, actually, the earnings season was quite disappointing. That's because any company-specific news were overshadowed by macroeconomic events. The Middle Eastern tensions stole the show so far. And then any negative company-specific news were magnified, just like we saw with Tesla, which dropped 15% last week. So we're continuing to remain optimistic that if the tensions in the Middle East do not go beyond the current skirmish between Hamas and Israel, we might see again, company-specific information and developments in the companies that deserve to have the attention of analysts, they'll come back in the spotlight.
To come back into the spotlight, and when we talk about the geopolitical issues, Eva, this also raises the question here just about the health of the global economy. Even before what happened in Israel a couple of weeks ago, you had an economy in Europe, in Asia, and to a certain extent in parts of Latin America that was struggling. Even here in the U.S., you can make an argument here that there's been some material softness. Do you think that the economy will hold up enough to support the fundamentals of publicly traded companies?
So up until recently, we thought that a Goldilocks scenario for 2023 and 2024 is the most possible scenario. And I think I want to be optimistic, and I continue to believe the same. However, if the Middle Eastern tensions rise and then we'll see a spike in energy costs, that will add fuel to inflationary pressures. And that comes on top of a slowdown in the U.S. economy. China's growth is slowing down. That brings down the global demand, which is important. We have seen an increase in defaults, both in corporate and subprime default rates. And so all these things are very concerning. However, on the bright side, we have unemployment, which has remained low, and we expect it to continue to remain low. And that's because of the large amounts of baby boomers who are retiring at a rate of 4.3 million a year. That's significant. And we expect to have unemployment to continue to save the day. It has been acted as a stabilizing factor, and it has kept spending high. So if we do end up seeing a recession, we expect it to be very, very mild.
Very mild recession, but I want to focus in on what you said about energy costs, energy prices. If that's the case, and we are heading into a period of sustainably higher energy costs, how do you position a portfolio around that? Because I imagine the typical playbook would be to buy energy companies.
Exactly. And I think it's very important, more important than ever, actually, to have a very adaptable investment strategy. It's more important than ever to be tracking very closely the macroeconomic events, both when it comes to the global tensions that we have and the rising treasury rates. Because, as you said, if we see the Middle Eastern tensions escalate, then it's prudent to take risk off, reduce your weights in risky assets, such as long-term assets, as well as move from smaller cap to large cap, and increase your weights in oil and other energy stocks. At the same time, on the flip side of that, if the tension continues to remain between the Hamas and Israel, then it's I think given the current pricing of the market, we might even see an end-year rally. So in that case, you need to move down from large cap to smaller cap and add exposure to healthcare and technology companies. And then I think so overall, I think it's super important to be tracking the macroeconomic events very closely on a daily basis.
And Eva, what's the haven in that environment with that sort of mix? Is it still bonds, or are you looking elsewhere for protection?
No, we are avoiding long-term bonds in particular as interest rates rise, bond prices come down. We are actually tracking very closely our ER30 TR total return index, which is up about 40% year to date. So we continue to track this. That's very heavy in technology and healthcare and communication services. But at the same time, we are adjusting every day. We recently reduced our oil and energy positions to add back more weights into tech as we see that the tensions do not escalate between Hamas and Israel. Again, though, we need to be very cautious. There are pockets of opportunity, but you have to be very careful with the macroeconomic events that are stealing the show these days.
Still opportunity, but you have to be careful. That's a good place to end on. Eva, really appreciate your time. That is Eva Ottos of ERShares.